Hello everyone and welcome to Inderes TV. NYAB just published its Q2 earnings results, and with me here today to go through the report I have the CEO Johan Larsson. Welcome.
Thank you.
All right, let's start with the Q2 report that was released earlier today. So what were the highlights for the quarter, would you say?
Well, the highlights, since H1 is H1 and we have a quite strong seasonality, the highlights is really that we have put ourselves in a better position than ever for the second half of the year. We have improved our margins in our civil engineering, the traditional NYAB. And that is like the sixth consecutive quarter with margin improvements and a strong order book, and of course our Dover acquisition has no negative surprises. When you do a larger acquisition, a platform investment of this type, you have always some at least small uncertainties, even if you have done a very thorough DD and you know the business and industry and such. So key takeaway is that there are no negative surprises. We even make a small margin improvement from Q1 to Q2 in the consulting business, and looking forward to continue that progress.
And as always, it's very valuable to hear your assessment and thoughts about the market outlook within your Nordic footprint. So could you give some color on that to start with?
Yeah, well, first of all, we are quite protected against the global uncertainties and trade and tariff wars and such. We address domestic markets within our markets, and here in the Nordics, where we have 97% of our revenues, I would say that Finland is still slow. We have a super performance in Finland for different reasons, skilled Finnish staff, and the great cross-border collaboration. So Finland a bit slow but picking up, clear positive signs on that market, which is very positive. I think it will materialize and be very obvious within 1 to 2 quarters that market will be up and running. In Sweden, the demand is huge. The markets we address, infrastructure and energy, are very hot. Both maintenance and new production, defense investments are picking up, which has been a good client for us for more than a decade. So the market sentiment is really good at the moment in Sweden. In Norway, different sort of economy, very strong state, big energy companies, but up and running, working. It's like according to plan and calculations and what we expect, but it's a good fruitful market.
So Norway up and running, Sweden strong, Finland still quite soft. Are there any segments that are specifically strong or have some challenges?
Well, everything related to renewable energy, more or less, are quite slow. Of course, we saw this like 2 years ago and did the needed changes and such, so it doesn't hurt us in any way, but we are waiting for them to pick up, because it's still a fact that we have to reduce the carbon oxide footprint. But we prefer reasonable project that has economical sustainability within them, not fairly or blunt, stupid projects. That has been the case in many cases. So.
And when do you expect renewable energy to pick up some investment pace again?
Well, I'm no fortune teller, but I think that it will be slow for another 2 years or something like that. That's my best guess.
Okay. And if we shift to the Uppsala tramway project, you have now signed the collaborative agreement for phase 1.
Yeah.
And you have also said that NYAB is well positioned to also secure the second phase of the project. Could you first start by elaborating on the significance of the project and also why you are so confident in securing the second phase of the project?
Yeah. First, I will elaborate a bit so the readers understand the difference between phase 1 and phase 2, because they're not industry nerds per se. But in phase 1 that we have won is a project planning designing phase where we actually, together with our partner and our client Uppsala, do the project theoretically, I would say. And by projecting and planning the future project, we are of course in a very good position to be the partner for phase 2. And of course we are looking forward to contribute, deliver quality, and together with them form a good project. So we are, of course, if you go by statistics, we could be extremely confident, since if you win the phase 1 in a collaborative contract and you are not appointed to phase 2, that the chance of that happening is like below 1% statistically. So with that and with our know-how, our knowledge, and our experience of working in collaborative contract with clients, we are quite confident. But we won't have a phase 2 until we have a contract, so that's it. But the significance in that way, it's a approximately 5 billion SEK contract, so it's a huge contract, perennial, over 4 years, close to, and that's pretty much it.
And you also do it with a partner, ASVI,
Yeah.
in a joint venture, so
Yes.
you are sharing the revenue.
Yeah. We have a great Spanish partner there who are specialized in railway.
All right. A key driver of NYAB's overall growth is to increase the average project size, which has increased from roughly 3.5 million euro in 2023 to around 4 million today. And while that might sound like a small increase, one should not forget that you have over 300 ongoing projects at the moment, and even the smallest increase can contribute to the top line growth materially.
Yeah.
With that in mind, what would you say is a realistic target when it comes to average project size for NYAB in the coming, let's say, 3 to 5 years, without increasing the risk profile for the business?
Yeah. The question is a bit too narrow, so we have to take into consideration that we continue to have the right mix between frame agreements, collaborative contracts and such, which has a much lower risk profile. But the way we are heading, I would say that in a couple of years, the average project size would be close to 10 million euros. It's in that region.
All right.
And for us, it's an everyday size of projects. We do much bigger projects than that, but this is one of the most important pillars in our scalable business model, that we grow by increasing the average project size. And it's nothing new. We've done it for more than a decade, every year. So it's a very linear curve on how we do it and such. So we feel very comfortable with this kind of growth.
And if we talk about the consulting segment, which saw flat growth in Q2, and here you have said that the near-term focus is on profitability.
Yep.
That said, how would you say that your efforts in improving the profitability has evolved during the second quarter? Have you seen any notable margin improvements in certain areas, or have you seen some challenges in others, for example?
No, not real challenges, but I mean it's a question of culture. It's a question of competing. It's a question of focusing on business, and not be too technical and engineering and stuff like that. But what we can see, the quick fix is we see where we have synergies between NYAB and Dovre. Dovre have had their first consultants working in Sweden for Siemens, and Sweden has been like a white country on the Dovre map. We are looking at a couple of projects where we can benefit from each other. They have a lot of high-end skills within Dovre, so those are the easiest ones to materialize. So and that's ongoing. But then there are a lot of other things that we can do going forward. So I hope that in the near future, we're talking about in a couple of quarters, there will be visible improvements and steady improvements going forward.
And now we are in H2, which is the high season for NYAB. With that in mind, what do you think investors should be watching in the coming 2 quarters here?
Yeah, well, they should understand that first of all, the Uppsala contract that you talk about, we was awarded that contract already 2024, and due to appeals and courts and stuff, we didn't sign the contract until now. We are in project business, which always has like timing effects in individual quarters. And although we improve our margin in our civil engineering business in the old NYAB margin, which is really great, we have taken a lot of costs in our growth journey, now heading into high season with Q3 and Q4. Just to exemplify the difference, last year we had a 9.5% EBIT margin in Q3 and we had a 10.5% in Q4. So, and we are very well built, prepared, have a great order book going into the second half of the year. So I think that that's what investors should keep their eye on.
All right, Johan, thank you so much for joining me today, and thank you for watching.